The stock market is currently closed, and as of the last closing bell on Friday, June 26, 2026 at 4 p.m. Eastern Time, Ondas Holdings Inc., trading under the ticker symbol ONDS on the NASDAQ, finished the session at exactly $7.83 per share. This represents a solid intraday upward movement of 2.02% from its previous close, with the stock bouncing off an intraday low of $7.50 and reaching a daily high of $7.97 on an exceptionally high trading volume of over 123 million shares. Now, if you are looking at that $7.83 print and thinking this is just another volatile small-cap defense play getting kicked around by retail momentum, you are completely missing the real story unfolding behind the scenes. The reality is that this company has quieted critics by executing a massive capital reconfiguration that has completely altered its financial structural integrity. While the broader market narrative has focused heavily on the wild daily price swings and a fierce battle between short sellers and momentum traders, the actual underlying corporate entity has managed to stack a massive cash balance sheet exceeding $1.5 billion following a strategic capital raise. This level of liquidity changes the entire nature of their business operations, from a struggling microcap drone provider into an aggressive defense consolidator capable of buying out its competition without needing high-interest debt. When people look at high-growth technology and autonomous systems platforms across popular online investing platforms, they often gravitate toward mainstream options like Tesla stock, Apple stock, or Nvidia stock because they offer high visibility and steady institutional backing. The typical expectation for a small-cap firm like Ondas is that it will continuously dilute shareholders just to keep the lights on, burning through cash while chasing speculative government contracts that may never materialize. This common ground of skepticism is well-founded when you look at the historical wreckage of early-stage drone and automation companies. However, the contrarian take that forces a complete rethink of this company is their aggressive roll-up strategy that is rapidly capturing market share in critical infrastructure intelligence and autonomous counter-drone technologies. By focusing on essential security software, command systems, and specialized communications, they are building a sticky ecosystem where recurring software revenues could eventually outpace hardware sales. This is a massive divergence from the standard retail narrative of a simple drone manufacturer, and it is exactly why the technical indicators are showing an intense accumulation pattern despite the recent pullback from its 52-week high of $15.28. Recent stock movements show an absolute battleground playing out in real time. If you monitor order flows across major trading platforms, from self-investing applications like the Robinhood app to advanced corporate options on the Interactive Brokers platform, you will notice that the daily volume has exploded dramatically over the past month. In May and June of 2026, the company logged consecutive days with tens of millions of shares changing hands, culminating in that massive 123 million share session on June 26th. This intense liquidity is a direct reaction to an aggressive sequence of corporate announcements. The company recently shocked the market by announcing an agreement to acquire Cyberhawk for approximately $125 million, a critical infrastructure intelligence firm with over 300 customers across 40 countries and a massive mountain of proprietary asset data. This acquisition is slated to close in the third quarter of 2026 and is projected to bring in over $45 million in revenue for the fiscal year ending March 2027, with an incredible 95% of that being highly predictable recurring revenue. When retail users pulling up charts on their Fidelity mobile app see a headline like that, the initial expectation is a massive spike, but the immediate reality was a temporary drop in share price as the market digested the mechanics of the $125 million valuation and the potential for near-term integration friction. This tension between what the market expects and how the asset actually prices is exactly what creates opportunity for disciplined self-investing accounts. For instance, institutional traders using Interactive Brokers stock trading tools look closely at the underlying order book backlog, which Ondas recently revealed has skyrocketed. The company secured over $30 million in new orders during May alone, bringing its total second quarter orders to over $110 million across its defense, security, and autonomous systems platform. By the third week of June, they tacked on another $40 million in defense contracts, blowing past $150 million for the quarter. This surging order book features contracts for advanced counter-drone systems, loitering munition setups, and robotic ground defense technologies from both domestic and European government customers. Yet despite this explosive operational execution, the stock experienced a downward trend from its early June peaks above $13 down to the high $7 range. This disconnect happens because shorter-term day traders on Robinhood stock trading accounts or SoFi investing forums often trade based on immediate price momentum rather than calculating long-term enterprise value, creating massive entry windows for those who treat individual brokerage accounts like a serious business. Let's zoom out for a moment and focus on the core fundamentals of what this company actually does and how its business model generates cash. At its core, Ondas Holdings operates through two primary segments that address critical gaps in modern security and communications. The first is its proprietary wireless data network technology, which provides secure, wide-area, mission-critical connectivity for large-scale industrial markets like railroads, utilities, and oil and gas fields. Think of it as a private, highly secure cellular network designed specifically for heavy machinery and critical infrastructure that cannot afford a single second of downtime or cyber vulnerability. The second and currently most explosive segment is its autonomous systems division, which designs and deploys fully automated drone platforms and counter unmanned aircraft systems. Their systems operate at the communication protocol level to detect, track, and actually take control of unauthorized drones without relying on simple signal jamming or kinetic projectiles. This means they can safely land an invading drone without disrupting local civilian cell networks or airport radars, which has made their technology highly sought after by defense giants. In fact, they just announced a massive collaboration to integrate the cyber detection technology into Lockheed Martin's Sancto platform. Comment below how many shares of Ondas you currently hold in your portfolio, and let me know if you believe these defense partnerships will justify a double-digit stock price by the end of the year. Evaluating past financial performance gives us an idea of how far this business has moved from its historical roots. If you check older financial reports through a standard online investment screening tool or look at historical filings on Fidelity Investments, you'll find a track record that was initially plagued by high net losses and minimal revenue streams. In its early days, the company functioned almost like a research and development laboratory, spending millions to perfect its software and radio frequencies without securing large-scale commercial scale. For years, traditional wealth management advisors managing defensive baskets or checking setups within a Schwab Intelligent Portfolios account wouldn't touch an asset like this because it lacked positive cash flow and predictable margins. The company was heavily reliant on small-scale pilot programs with major railroads, but the turning point arrived when they shifted their business model toward defense consolidation, using strategic acquisitions to build a comprehensive suite of autonomous systems. They absorbed companies like Mistral, Rotron, and Omnisys, combining battlefield orchestration software with long-range strike capabilities. This strategy bore fruit in their first quarter 2026 financial results, where they reported record revenues of $50.1 million and officially raised their full year 2026 revenue forecast to a stunning $390 million, supported by a massive pro forma backlog of $457 million. When managing an individual brokerage account, whether you utilize Interactive Brokers fees tracking for frequent trading or lean on Fidelity mutual funds for stable core holdings, analyzing future scenarios requires a cold look at both execution risks and clear upside catalysts. The primary risk that keeps short sellers aggressive on this ticker is shareholder dilution. To amass that $1.5 billion cash cushion and fund high-premium acquisitions like Cyberhawk, the company had to issue a substantial number of new shares, which naturally dilutes the ownership slice of existing retail investors. If the management team fails to seamlessly integrate these global business units, or if the projected 95% recurring revenue model from their new software assets suffers from client churn, the cash burn could accelerate again. Furthermore, international defense contracts are notoriously lumpy, meaning a delay in a single government approval can push tens of millions of dollars from one quarter to the next, causing massive earnings misses and sharp drops on high-volume investing sites. Conversely, the upside potential lies in the widening chasm between the current valuation and their rapidly expanding addressable market. Governments worldwide are realizing that traditional air defense is entirely unprepared for low-cost coordinated drone systems, creating an urgent multi-billion-dollar demand for autonomous countermeasures. Ondas is sitting right at the intersection of this demand with battle-proven software, deep integrations with premier defense contractors like Lockheed Martin, and a massive capital reserve that isolates them from high-interest rate environments. For an investor utilizing intelligent portfolio strategies, online investing tools, or tracking specialized tech via Fidelity IRAs, the stock presents a classic high-beta asymmetric setup, where the current reality of commercial traction is completely outstripping the market's outdated expectation of an unprofitable microcap drone maker. To bring all of this together cleanly, the central insight here revolves around a complete mismatch between past reputation and present financial reality. The broad market expectation, frequently reflected in fast-moving social media stock discussions and simple retail trading apps, is that Ondas is a speculative, highly diluted gamble that belongs strictly in high-risk self-investing baskets. The hard reality, substantiated by a $1.5 billion liquidity runway, a revised $390 million annual revenue guide, and a soaring $457 million contract backlog, is that this company has successfully repositioned itself as an essential software and autonomous provider for global defense and critical infrastructure. As these massive acquisitions begin to hit the consolidated income statements in the latter half of 2026, the contrast between investor expectations and fundamental reality will likely force a massive structural revaluation of the equity. Whether you manage your assets through Fidelity Wealth Management, execute daily setups on the SoFi Active Investing platform, or maintain long-term equity via a Robinhood cash management account, tracking the conversion of this massive backlog into high-margin recurring cash flow will be the ultimate factor in determining who wins the battle on this highly contested ticker.